Yo, how's it going? Welcome back. This is Looney, and we're going to go over 3 indicators to use when the market is volatile, or 3 indicators that I use on a daily or when I'm trading stocks or doing any kind of technical analysis. And remember, my opinions are not financial advice, so that is of note or disclaimer. So the three that we're going to go over are RSI, or Relative Strength Index, MACD, Moving Average Convergence Divergence, sounds like a lot, and then Bollinger Bands. So I'm going to pull up a stock that you can clearly see how these indicators are affecting it. And the first one I'm going to go over is RSI. And we have PDD. So PDD had earnings recently, and it actually beat earnings, but missed out on revenue. So it pulled back 24%. So it dropped a ton. And I have this set to 1 month out, and we're going to take a look at RSI, a Relative Strength Index. And RSI is measuring the speed and change of price movements, and it helps you spot when the stock is potentially overbought or oversold. So in volatile markets, RSI is crucial because it can signal when a big price move is running out of steam. So let's say RSI goes above 70, the stock might be overbought, and a pullback could be on the horizon. But if the stock is below 30, it could be oversold and it could be ready to bounce back. So I have this 1 month one pulled up because I trade options on a monthly basis, and it's good for short term. A year doesn't truly get the right indication of what the stock is looking at. So we're going to set it to 1 month. And to set up this RSI, you're going to hit these bars on the left and mark this RSI on the bottom. And here you could change the way it is. I'm going to leave it as default. It's currently at 14, which is just days. If you do more, it's going to be less reactive to the price movements or less accurate. And then if you do less, it's going to be really reactive to the price changes. 14 is that good sweet spot, and it's default. So I'm going to leave it as default. And then here you have overbought level 70 and oversold is 30. And if you want to read more about RSI and the other indicators, you could hit learn more, and it goes into detail how they work. So anyways, now that we have this set up, you could see that it sets up this chart on the bottom. And the way RSI works, it works pretty linear with the actual price of the stock. So RSI is low when the stock is low, and RSI is high when the stock is high. So here, if we look at here, RSI is almost at 7, which is really low. So this might be a good time to buy the stock or get into it because it is oversold or undervalued, or however you want to look at it. And then here, this might be a good time to buy. And it works. So you could see here, the stock is at almost an all-time high around here. It was at 140. And then here, it's at 90. So good time to sell here and good time to buy here. I use RSI all the time when trading stocks. I'll know whether it's a good time to do a covered call or a good time to sell a put. So this one is a good time to sell a put because it's on the lower side and it should be trending upwards. Or you could buy a long-term call. It's very similar. All right. So now the next one is going to be MACD, or Moving Average Convergence. So this one sounds complex, but it's actually just tracking the relationship between two moving averages of a stock's price. And it helps you identify trend changes, which are super important in volatile market. So when the MACD goes above the signal line, it's a good time to buy. When it crosses below the signal line, it's a good time to sell. So this is good for catching the trends early. And I'm going to show you how to get there. So it's similar way. You're going to hit these bars at the top left. Check off MACD. Once again, you can learn more about it here. And I'm going to keep it as default. So we're going to hit done, get out of here, and it brings up this chart. So this is really good for catching trends early. And I'm going to get rid of RSI just so it makes it a little bit bigger and easy to read. And the ones we're looking at is, it kind of glitched out, but it's going to be that pinkish line and the purple line. So when the line is above the purple, or if the purple is below or crosses below the orange, it's a good time to sell. And when it crosses above, it's a good time to buy. So this is for catching trends early. So what we're going to look at is right here where it crosses. So this is when it's a good time to buy, right here as soon as it crosses, because as you guys can see, it follows the trend. It goes higher. And then similar here, let's see if it crosses below. It seems like it crosses below, but I guess it doesn't. Right here is where it crosses. So this would be right here would be a good time to sell, because this is the early trend of it start to sell off, and which it does, it drops. Or even here you could do it. But anytime it crosses that line is a good early trend indicating whether to buy or sell. Okay. And I wanted to stop here because if this gets confusing at any moment, don't forget to join my Discord, because I have a lot of members there and we make things super easy in there. So the links will be in the description. All right. So lastly is the Bollinger Bands. This one are bands that are just dynamically based on volatility, and it expands when volatility is high and contracts when it's low. So in a volatile market, the price often bounces between these bands, and as soon as it touches the upper band, it might mean the stock is overbought or overvalued, and while it touches the lower band, it can indicate that it's oversold or undervalued, or a good time to buy. So it's cool that they also help you set up like stop losses or know what strike price to do. So we're going to include that one in this chart, and we're going to go up here and once again hit this chart, and you're going to check off BOLL. And once again, you could go here. I'm going to keep it standard, 2 standard deviations, and it's based on a bell curve. So it means that it's going to trade between these bands about 90%. And you could read more about it on Robinhood. Okay, so if we're looking at it here, as soon as it drops, it becomes super volatile because the bands expand. And this is a good time to sell options because the premium is high, volatility is high, but volatility is high, so risk is a little bit higher. And then also right now, it's closer to the higher band, or BOL upper. So it's a good time to sell a covered call because it might be a time where it's flattening out and it might touch that line again, or it should touch that line and go down. So a good thing to do is to go to trade options, and we're going to go a month out and sell a covered call. So I'm looking at the BOLLU was 98. So what I would do is anything above that 98. So we're going to do one that's like 100. So this 100 one you would do, the delta, the chance of profit are all what I'm looking for. And you would make $231 as long as the stock doesn't go above 102 in a month. And you could roll, or you could do any kind of management you'd like with that. So that would be a good trade because if you guys see here, it is unlikely to go above that 98.54 or 99. So I hope all these indicators were helpful to you guys. So I would definitely use these when the markets are pretty wild. They're volatile. So RSI, MACD, and Bollinger Bands are all tools that can help you stay ahead of the curve and make more informed decisions. And if you guys found this video helpful, don't forget to like, subscribe, and if you guys have any questions, you could drop them in the comments below or join my Discord. Don't forget to follow me on Twitter. All links in the description, and have a good one. Peace.